Wow, yeah, it's a happy Thursday. Hello, everyone, for joining us. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to our business clinic number two. Right, we started off last month. We did the first one, and it was a very good topic. Oh, welcome, Habib. Assalamu alaikum.
Excellent.
Nice to have you on.
Good to be here.
I know, same here. We just started, and we're hoping that people are joining live, and I was just welcoming everyone. So Alhamdulillah, it's the second month of our business clinic, and last month we talked about how we're going to be having this monthly business clinics at How Finance, and we're going to be sharing specifically dedicated to our SMEs out there who want to know, get more insights about business strategy, business financing, um, and we shared the first topic was about business ethics. And if you missed that one, please go back into our YouTube channel. You'll find the recording there. It was a very beneficial topic about business ethics. So please go back and don't miss out on this one as well. It's going to be interesting. It's about business financing options for small businesses, SMEs generally, and like we said, we're dedicated to SMEs in this business clinic and really want to bring to you very enlightening content. Um, I would just say a brief word about HAL Finance, and our organization is an Islamic Finance Resource Center, and we are set up to close the knowledge gap on Islamic finance and provide advisory and consulting services for businesses and institutions and households to enable them, access finance better, and basically improve, their business profits, and do better as as institutions. So we're really here. We have, if I share my screen, just how we kind of define what we do so that it's clearer to those who are out there. I'll just share my screen very quickly. Um, we talk about the fact that 1 second, share. Can everybody see? I think Habib, everybody can see, right?
Yeah, it's coming up. Yeah.
All right then. All right. So at How Finance, when it's Islamic Financial Resource Center, like I mentioned, and we want to enhance Islamic finance education and access to Sharia compliant financial services. And these are the things. This is how we achieve that. We do advisory for businesses and governmental institutions who are interested, financial advisory, and then community engagement. We want to engage with our community through social media. We engage with our community, and beyond social media, our intention is to go to institutions, universities, secondary schools, engage with people about this alternative mode of financing, and also teach financial literacy, bring financial access, and liberate people financially. And then we do capacity building. We have in the works a number of courses that we're working on that we're going to bring for, on the aspect of Islamic finance for people in different, whether you're an undergrad or you're a fresh student, or whether you're a working professional, or you're already in the finance field and you want to transition into the field of Islamic finance, or you're just a regular person, business owner that wants to know about Islamic finance. There are various courses that we're working on that we bring in to our community. And then we have technology solutions as also one of the core things that are in the works for us, in the sense that we want to be able to bring our services to you with technology, have platforms and tools that would allow you access Islamic financial services better. So that is that about How Finance. But today it's about the How Business Clinic, right? The Business Clinic is dear to us, and it is for your SMEs. If you are joining us live, tell us where you're joining from. What kind of business do you do? And what do you hope to learn from this session? You can type it in the chat, and we'll be excited to respond to you, to call out your names and know that you're joining us, where you're joining us from, what you do, or what kind of business you're into, and what you hope to learn from today's session. Habib, I don't know if you had any things to add, regarding the business clinic and how finance. We did the first one together, so
Yes. So you've said everything,
mm,
and just to reiterate some things. Of course, the business clinic is geared towards businesses that also want to have adopt some halal principles, and we've streamlined the business clinics along three categories, which is business ethics, and we had something on business ethics the last. That is our first webinar. Finance, which is what be the theme of today's topic, and the third is strategy, which definitely we would be discussing that too, or maybe bringing experts to come and discuss that topic with us. And we hope that our listeners and audience would enjoy every bit of it, and they won't just be here to listen, but they will practice whatever they learn from this series of webinar. So yeah, that'll be it for me.
thank you so much. Thank you so much, Henry. So I'll just go dive
Yes,
into the topic for the sake of time. We're hoping that we would not take too much of your time. We know business people are busy people.
of
so
course.
so so for the highlight of today, the financing options for small businesses, and it's really about funding your business ethically, right? Because at How Finance, we're focused on compliant, Sharia compliant financing, halal financing, and we will look at the topic in general, but then also give you important tips that matter to you from a halal perspective. So going into the topic, funding is or financing. I'll be using those words interchangeably. Every business needs it, right? Whether we say we need cash, every business needs funding to grow, and every business is at a different stages would need different kind of funding, right? We need money to make money. That's really literally the law, right? You need money to make
Yeah,
money, and but as a small business or as an SME, the different your financial needs would vary depending on what stage of business you are. As you're starting up the business, you're looking for startup capital. You're looking for money to even just get your first equipment, to get your first shop, whatever it is, to get your first website, or your first app loaded and things. If you're just starting up, you will need startup capital. If you're already in the business and it's already stable, right? So maybe you need working capital, which is, the kind of money you need to run on a daily basis. So if I'm supplying, groceries, I'm supplying a grocery store plantain chips, for example, right? I need money to meet those supply needs, right? I need money to source from the supplier and supply to the customer, right? So those daily working capital needs, right, are there. Um, and then the last stage that a lot of small businesses face. So I've mentioned about the startup. I'm just starting up. I need money, right? I'm probably scrambling for my family members, right? And then the second stage where I'm already in business. My business is sustainable. I have a good model, um, and I need money to be able to meet my daily operations. And then there's the last stage, which is the expansion, right? Which is like, okay, I think at this point that I'm getting more demand. I need to expand. Maybe I need a bigger space. Maybe I need a bigger equipment. So it's at different stages as an SME, there are different things, there are different kind of finances you're going to need, and there's going to be different needs to ask yourself, where can I get money? And that's just that fundamental question that every SME is like, okay, so where can I get extra funding? Where can I get extra money? Every SME is constantly asking that question, and that's because you're at different stages of your. If you're not asking yourself that question, it's probably because you're not ready to take the next move for that business, right? You're just like, okay, the business is self-funding itself, but do you want to scale? Do you want to make it bigger than it is? Then you begin to ask yourself, where can I get extra funding, right? And that is the fundamental question that we want to answer today, right? And then obviously, depending on the type of business as well, right, it will determine whether you want funding, you want expansion funding right at the start, right? Like the tech startups, for example, they need really big funding just like at the start of the business to be able to even bring anything to market, right? Um, so it all depends on what stage of your business of the business that you're at, right, and the type of business that you run, right. And then it's important to know that funding can come from internal and external sources. It can be internal, it can be external. A lot of times we're looking externally. When we're saying, oh, I have to go to that bank to get that loan. I have to, but what we want to establish today, I want you to take away is that there are internal sources and there are external sources. And we will talk about that when we talk about the inner circle and the bigger circle. And then the final point on that is that financing comes at a cost. And I think almost everybody knows that is that mostly, unless it's a grant or something, it mostly comes at a cost, right? And so we will also be having that conversation about cost today to say, okay, these are the options, these are how much they cost in in a very quick summarized sense, but at least to give you a view of what the implication of the financing options that are available. Habib, what are your thoughts about this introduction? I think we've
Yes.
nailed it.
So exactly, business, like you said, business need to be aware. They need
Mm-hmm.
to have this mindset from the get go. Or do I want to run a business that would outlive me? Do I want to
Mm-hmm.
run a business just for survival mode?
Mm-hmm.
Using Nigeria as a case study, because of the economic situation,
Mm-hmm.
people are forced into business, not necessarily because they want to build an empire or they want
Mm-hmm.
to build the next Microsoft, the next Apple,
Mm-hmm.
and or even the next Dangote. So,
Mm-hmm.
and depending on your mindset as a business owner, would in fact determine the kind of business financing which we'll be
That you
speaking
seek.
on later on
Mm-hmm.
that you would need. So,
Hmm.
if you want to remain small, then there are certain finances that you should not even delve into. If you want to grow big, then there's some financing options that we think are best suited for you. So the mindset is very, very important. And I believe as we go on, we'll be talking about this kind of financing depending on the kind of orientation you have, the kind of outlook you have for your business in the
Mm-hmm.
foreseeable future. So that's it for me.
Thank you so much, Harry.
Yeah.
Yeah, so Outlook. So, we're going to delve right into it because, we just want to go right into business. Where to look for funding. These are like the things we know on a daily basis that as I'm starting business, and I think I call this the inner circle. Okay. And I think it's very important that I have two sections, the inner circle and the bigger circle. Where do I look for funding? So the moment I realize that I need money for my business, or I'm at the point where I need some sort of funding, the inner circle is should be our first go-to, right? And the first is your personal savings. A lot of people rely on personal savings when they're starting the business. Okay, but then after the business has started, everybody forgets about personal savings. But saving culture should not leave you even after you've started your business. You should not just spend everything that comes out of the business. There should be a culture of saving putting something back in the business, saving something aside. But when you want to do that, you want to buy that new, I don't know what, refrigerator, generator, equipment for your business, right? Personal savings is the first. And as a business owner, just the way you have a savings account, for your, or an investment account for your personal, you can have for your business as well, right? You find a lot of big businesses that they just have money that they set aside. They're just setting it aside. That opportunity will come for investment. Opportunity will come for investment. So as a business owner, as a forward-thinking business owner, we should first stop for your financing should actually come from internal, from the business itself, trying to save something aside. It's not when the going gets tough that you be like, oh, now I need to go and look outside, right? We need to look internally and save from what we're generating gradually so that the business can at least have something to fall back on, like an emergency fund for the business. Okay. Right. And then customers and suppliers is the other inner circle that a lot of people, I think maybe some people tap to a certain extent, but not as much. Um, our customers and suppliers will not, they're not the people who, they're the people we buy from and sell to, right? Invariably, we give cash to them, right? That's the suppliers and the customers, they give cash to us, right? So how can we tap this from a financing perspective? It's a very simple concept for the suppliers. You realize that your suppliers, you find businesses such that the supplier is able to supply goods to you without even for like 30-60 days, and gives you a 30-60 day payment window. That is actually a loan if you think about it, because the people that go to the bank and say, oh, I need a loan for 2 months, or I need a loan, people that go to this very quick, those rapid credits, fintech companies that are now there and say, oh, I need a 30-60 day. You sometimes you don't even have to go to, because a lot of times your supplier is willing to give it to you at no cost. Is willing to say, okay, I know you have a good character, you build a good relationship, right, over a period of time. I can allow you take these goods on credit for 60 days, and then you can even get your customers to pay you before you have to pay your suppliers. So that entire chain has self-financed itself, right? So the principles of customer and supplier financing is first that you have to build good character and good relationship with the customers and suppliers so that they can trust you enough. And that comes with every kind of, financing or credit. Exactly, is that there has to be trust, there has to be character. You have to have credit worthiness. So but what I wanted to drive home here is that before we even look outside and say, oh, banks and financial institutions and whatnot, let us look at within my own, you know, business model. How can I utilize the financing options that are there? So I look at customers and suppliers. I am an important, you know, they're an important source of at least bridging that gap. I'll call them, it's a bridge finance really, because at the end of the day, the supplier is giving you the goods ahead of time. You don't have to drop money, okay? And you're able to sell it off, and before the supplier requires the money back, the customer has paid you. You have your profit. You haven't, literally staked anything. So that is something we should look at. On the customer side, it could be customers paying you ahead for your goods, right? If you have a very unique product, or um, some customers will be willing to actually pay you ahead, pre-order for the goods, basically, so that you can use that money to finance the business, right? And then there's strategic partnership and alliances, right, where you know people, your acquaintances, for example, and this is not just family and friends, but like networking, right? You meet somebody and you think, oh, this person is really interested in the industry that you're in. You're like, oh, do you mind, that we partner together? Do you mind that we and this is not even like an angel investor or something, but this is like, somebody in your network that is interested in your business field, and is the person has cash and you have ideas, and it's like, oh, um why don't we put two and two together, and I can put money in your business, and I can be getting so amount of profit gradually, right? It could be in form of debt, it could be in form of equity, depending on how you guys agree. But looking within the internal before we begin to go to institutions, right, is very, very important. Look at my network. Look at, and then we come to family and friends. Family and friends are usually the first stop for a lot of us, and which is fair, which is good. But we can also look at these other people. Family and friends is, your brother, your sister, your colleagues at work. You can turn to them for a short-term loan. You can turn to them, obviously, an interest-free loan, as we're speaking from a halal perspective, right? You can turn to them even from a strategic partner's perspective. You can turn to them to buy a portion of your business and things like that, or to buy an equipment for you, and you pay them gradually, right? On that equipment. So these are the things that I wanted to emphasize on the inner circle. Before we move to the next slide, Habib, I'll let
Yes.
you.
So truly, it's really the inner circle, because business owners need to consult these four categories first, or they need to explore these four categories of the family and friends, personal savings, strategic partnership, and their customer and suppliers, because not every business really needs that form of external financing from the
Mhm.
get-go. And a lot of business owners make these mistakes in terms of, oh, I the first option I need to go to is go to the bank. Of course, they're all out there where you can easily get 5 minutes loan and the likes. But it's very, very important that they look within their inner circle to explore this specifically speaking, these four options. And you'll be surprised at when in finance that we call it bootstrap, kind of, in a way, when you do not necessarily get external funding, that and whatever you get within yourself through your personal savings and the likes. And truly, when you are able to do this, and maybe as your company or businesses grow, your business grows over time, you are able to even attribute more value, because your business gets more valuable in the sight of maybe external financiers or even investors, unlike when you get to go getting external funding from the start. So I think for me, it's a no-brainer. These are the options business owners should look out for before going outside to seek external finances.
Yeah, thank you so much. I think that being said, we emphasize the fact that there are certain businesses that even if you scramble all your savings and scramble all your customers and suppliers, right, because of where you want the business to go and because of the kind of model that that business would run, maybe some kind of tech startup, that wants to, a Jumia, for example, that wants to become a Jumia, for example, you know that
Yes,
even if you scramble through this for, there's still going
you're
to be
right.
limitations of how
You're
much
right.
you need millions of
Yes.
dollars and whatnot to get to the
Re-
next level.
Really,
Okay.
there are some businesses that are regulated and you
Mm-hmm.
need to get a license before you start off. So
Exactly.
businesses like that might need to go out there to get the external funding. But
Okay.
of course, we're more focused on small businesses. You
Yes.
get they need to look out. So even big businesses, apart from some exceptions,
Mm-hmm.
it's important they look out for the inner
The
circle.
inner circle. Yeah.
Yes.
Yes. So look at your inner circle. Now let's go to
Yeah.
the bigger circle because I know everybody's eager to go to the bigger circle, but I hope you've digested the inner circle well.
Everybody wants to go big. What do you think?
Yeah, but the
So
inner you start gradually, right? It's a journey. And like you said, the more you are able to prove that you have a skin in the game, that you have the business has been you've been able to pull, finance from your inner circle. The more people in your inner circle believe you, and and they've invested in the business and they've put more in the business, the more likely it is that you'll be successful in the bigger circle when you're about to approach it, right?
yes,
So let's
exactly.
approach the bigger circle. So the bigger circle, where to look for funding. Once we've looked at that inner circle, these are the general categories that people
Yeah.
go to for funding. So Habib, I'll let you take
Okay,
this.
so and this also is in line with what we said earlier that depending on your mindset as a business owner, you want, and of course your business model, the idea for majorly for let's say tech startups that they are slightly different from SMEs, in my own opinion, in the sense that their business model, they are trying to test an hypothesis, really.
Mhm.
And their business model is novel. The difference between them and maybe a traditional small business or a brick and mortar small business is that when they do well or when their hypothesis has been tested and it's successful, they tend to scale exponentially. And
Mhm.
if it doesn't go well, they fail. You get so
Yes.
businesses like this might maybe after exhausting their own personal savings, family and friends, they look out for angel investors. Those investors that can easily bet on them at the early stages and trust in them to believe that they can scale whatever idea or business that they have in mind. And we already have a whole lot of them today. So these business owners, or should I say tech entrepreneurs, most commonly will look out for angel investors to back their venture in the first place before they now continue growing up the ladder to raise further rounds. So their first point of contact is the angel investor. Um, Another thing again is the reason why tech or entrepreneurs or business owner look out for angel investor is because the angel investors are maybe at times could be maybe your big uncle or something you
Mhm.
get at times, and they want to make it formal and not necessarily from a family point of view. You get because it's also very very important for the business. So they just draft a gentleman agreement and the business goes. Unlike if you go for maybe if you are attracting an institutional venture capital that will require maybe a lengthy period to close the deal and the likes. So preferentially, angel investors are preferable for most business owners to start speaking with. You get. Then the next is venture capital. So looking at the sequence, maybe after you get backing from angel investors to support you, and of course, it's important you know that the angel investors start with maybe smaller checks compared to venture capitals that will be able to put in bigger rounds or bigger checks. You get, and when venture capital comes, is when maybe your business you've maybe proved your product market fit, you've proved that your business is working, is sustainable, is stable, and can grow, then I would say that's when it's right for you to start looking out for the venture capitals. You get, or the venture capitalists as we have them here. Note again is not every business really, I'm saying not every business need this form of investors or this kind or this category of investors. You get, you
Mhm.
need to number one maybe if you think you need an angel investor to invest in your business or a venture capital company, then you need to be able to prove some things, because they also definitely look out for so many things, which of course we'll talk on that along the way. Then we have crowdfunding, which is, I would say, the a novel, or should I say a new way of raising funds for small businesses. And it's quite interesting in the sense that small businesses do not necessarily have to go to financial institutions. They can maybe, of course, we are in the tech world today. You can go and maybe raise a GoFundMe, as we've seen in numerous occasions, or platforms that allow small businesses to raise funds. So this gives small businesses the opportunity to raise little amount, as low as 100, 1,000 naira, of course, in Nigeria, or even $100, you get, from different individuals, of course, that believe in the business model, that believe in the product that the business is selling and the likes. So crowdfunding has been a mechanism or an instrument through which small businesses have been able to raise funding, and so far so good. It's been one of the most popular source of funding for small businesses, considering the fact that it's flexible, it's quick, and I think business owners are more comfortable with it. Um, the next, of course, are financial institution. And financial institution, you mean your banks,
Finance
your
houses,
finance houses, your investment firms, and the
microfinance
likes. You
banks.
get microfinance, exactly. These are financial institutions that you would ordinarily go to get funding, and this category of or should I say, these financial institutions also come in handy for small businesses. In fact, they, because in most cases you bank with them, they understand your financial history. It's a lot easier for them to advance you some form of loan. You get, um, of course, we understand that the loans can come in form of interest bearing, and of course, there are the Sharia compliance financing that these financial institutions grant. So, business owners too can also look towards these financial institutions to get access to this form of credit for them. And for mostly from financial institutions, you get a debt, you get, or a loan as you would have it, rather than maybe an equity form of financing. Then private lenders could be maybe individuals that maybe in their capacity, they are not necessarily angel investors, to be fair. They are distinct. They just, okay, they have built wealth over time, and they they want to maybe help businesses, and they might not necessarily be individuals. They could also be small companies, you get,
Yeah.
that are looking to, they are private, they are not necessarily out there, but they give these small businesses little checks. You get very, very little checks compared to the checks you get from a financial institution, venture capitalist, or angel investors. So these private lenders too are out there for people to take note of. But one thing that is very, very important as we go through this bigger circle of financiers is that it's important for business owners to know what these people look out for. What are their philosophy? What are their values? Because the truth be told, these categories of people, even the crowdfunding, for example, through a crowdfunding platform, they would have their do's and don'ts. They would have their investment thesis. They will tell you the business kind of businesses they finance. So it's important for these business owners to understand the criteria in the first place, so that you don't waste time chasing an headless chicken. Let me use that word. So it's important you do your due diligence as a business owner to see if this financial institution or financier is in line, can actually finance my business. The next is grants, and grant is sweet. I like grant a lot because almost comes at no cost. And unfortunately, a whole lot of businesses do not tap into this opportunity. And of course, the reason is as in is not far fetched, in the sense that grants too, apart from it's free, it comes with its own criteria for you to be able to access. And we have a whole lot of donors, NGOs, or should I say specialized institutions that are not for profit, that cater to specific sectors or specific problems, or should I say businesses that are solving specific problems that they are looking to fund and ensure that they maybe grow is at scale to
Yeah.
maybe solve that problem. So grant is, in fact, I would say before you even exhaust, or should I say, go through the other means of financing, explore grants really, because it comes at really no cost. So
Yes.
it's free money. I would encourage small businesses or big businesses to explore grants more. Um, the last that we have here is incubators and accelerators. We had a whole lot of emergence in hubs, accelerators, incubators, especially from this new age of technological innovation. You get, so a whole lot of incubators and accelerators in form of hubs, innovation hubs, were set up to help these business owners to refine their idea and ensure that the idea is culminated into a product or services, you get, that can eventually scale to be used by a whole lot of people. And these incubator and accelerators have been able to do address this issue a lot, helping entrepreneurs, business owners to fine tune their business model and to help them grow. Apart from the fact that they help them fine tune their business model, they also provide some form of funding for them, like a pre-seed or seed funding. You get, because they would have gone through an incubation phase. It could be 3 weeks to 6 months, or 3 months for an incubator, and
Mm-hmm.
6 months for an accelerator.
Yeah.
So you must have gone through the rigorous business training, you get, and when you're coming out, there's a form of funding in most cases that these accelerators or incubators give to these business owners. So in most cases, it's also very good to come through this channel, so that you're not just getting funding at the end of the day, you are getting some kind of business school education. Let me use that word.
Yeah.
So a very good avenue to get funding and some business lessons.
Yeah.
I don't know if Latifa, you want to add one or two things.
All right. I think you've said a lot about it, and just also touching back at the crowdfunding, that crowdfunding is something that people need to explore, especially in this age of technology. If you I mean, what we encourage is that you're not just doing business for the sake of doing business. You're doing, innovative business. You're doing sellable business. You're selling something that is unique. And if you have a good product, approach the public. Go to these platforms. Put up your pitch because you need to put up your pitch
Yeah,
and say, okay, this is what I sell. This is what I do. This is the potential of what I do. You know, and you find people $100 here, $200 here. Before you know it, it becomes something tangible. And um, the crowdfunding can come in different forms, right? It could be that those people are they're basically going to lend you the money for some time, or it could be that they're investing, in the business, depending on how you structure it and how you pitch it to them, right? But the power of it is the fact that you can get money from a lot of people, as against going to one individual or trying to pitch an angel investor, or venture capitalist, right? So I think that's very, very important. Then financial, and I think maybe because we said tech startups, I don't think it's not only tech startups, so we don't get discouraged, that have the potential to attract really big capital, like, or like, negotiate with angel investors. I mean, I recently came across the company that she's an architect, and you might know, I think it's Taylor that it's called. She's an architect and she makes furniture. She makes really good furniture in Nigeria. And she's been able to raise different series of funding, from investors, and that's because she's been able to position her business to say that I'm not just making anyhow furniture. It's going to be high quality. It's going to be unique designs that are branded African. So it's all about how, when you want to get funding, you have to make a case for your money. Even when you go to the bank, right? Aside the fact that they will collect money from you, they also have to see that this person has potential, or this person has um what's it called, has good sale history and things like that. But what I wanted to mention, just looking at the top three angel investors, venture capitalists, crowdfunding, are more interested in how well the future is looking for your business, in terms of your potential to scale and things like that. That is those three: angel investors, venture capitalists. And then when you come down towards like financial institutions, private lenders, they are more focused on cash flow. They are more focused on your sales. Are you over the next, you know 2 to 3 years, are you going to remain in business? Are you going to be able to, meet the obligations of payments that you're obligated to, things like that, right? So on the top level, they're more interested in the long term.
Yeah.
On the lower level, there's a bit more short term focus.
Short term.
If the
Exactly.
government or an institution is giving you grants, it's not as if they'll be handling you for profits. The most important thing is, are you using the grant for what you said you're going to use it for, right?
Exactly. Yeah.
So that's what I just wanted to emphasize there. That the top are more long term focus. So when you're looking at more long term growth and expansion, look at your angel investors, look at venture capitalists, think of crowdfunding. But when you're looking at when you're looking at like maybe like I just want to like finance something for a short 2, 3, 4 year, 5 year period, and you can go to financial institutions, you can go to private lenders, things like that.
Yeah.
So I just
Exactly.
wanted to drop that there. So now, since we've
Very
talked about
well.
financial institutions, sorry, Habib, you wanted to say something?
No, 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 no. Go
Okay,
ahead.
right.
Go ahead.
All right. Yeah, we can go now to just wanted to touch quickly about the traditional financing arrangements, and then we talk about also the Sharia compliant financing arrangements. And we've talked about this here and there. Equity is basically, just in case these words come at you, equity is ownership stake in your business. So if an angel investor is going to invest, he wants an ownership stake. If venture capital is going to invest, he wants an ownership stake. In equity is basically somebody buying a stake in your business, whether it's your family or friends. When they say they want a stake in your business, that is an equity. And what do you pay them back in return for equity? You pay them a profit share of the business. Okay, that is as simple as equity gets. You pay them profit share, and they also have control. To the certain extent of whatever ownership they have. If they own 20%, if you're making decisions on the business, they might not worry so much. But if they own 50% of the business, they would want to know, what are you doing? What is your strategy for the next 1 year and things like that. So the moment someone has equity, the implication is that it's likely to be more control, more discussion with the person on how you're running the business, right? And you're going to be paying them a portion of the profit, in a percentage of the profit, depending on how you um, agree to it. There's also transaction partnering. Is so instead of someone directly owning your business, they're like, oh, you have a supply contract to supply so. I don't want to stake in your business, but that supply contract, let us partner. I'll bring money, you bring money, whatever, and we share profit. Yeah, so it's also structured that way. So there's also transaction partnering that happens, in terms of traditional financing arrangements. And that would happen, maybe with a strategic partner, partner that we mentioned in the inner circle. That could happen with the Islamic financial institution, because that's one of the models they use. And then there's debt, right? There's debt. Maybe I shouldn't have specifically said loan with interest, because it's not all the time that someone wants to collect interest. Some people can be, family, and be like, okay, take this money, I'll borrow you for 1 year, pay me back, or borrow you for 2 years. Let's just make an agreement, and go do your business, that kind of thing. As long as you return. And in Islamic finance, we call that called al Hassan, meaning it's a benevolent loan where I'm not asking anything in return for it. I'm just and I think that Islamically, from Sharia point of view, it's there's blessing for the person who's given the loan without asking anything in return. But how
Exactly.
often do we get that, right? Aside from our inner circle, when we begin to go to the financial institutions, then there is something that they're asking back in return. Right. And we will learn more about the Islamic alternative in the next slide. And then there's lease to own, which is a structure that people use to acquire or to finance equipment. So a lot of the airplane companies would use lease to own. A lot of the Uber drivers, that are trying to get a car for their Uber business, will use the lease to own
They
method,
call it
right?
higher purchase too.
The higher purchase, exactly, higher purchase, right? So that's basically the so that those are the models that you come across when you hear equity, you know that, okay, this is ownership. Person wants ownership stake in my business. If you hear debt, the implication of it is that I'm getting money and I'm going to have to pay a specific amount back
Periodically.
on that debt, right? So we'll just go into the models used by assigned financial institutions. There is this is something we want to explain well to everybody, because while a lot of Islamic financial institutions are offering these services, not everybody knows enough about it. So
Yeah.
the Mudaraba model, we call it the profit and loss sharing model, is basically a model where you go to the bank, and the bank says that, or you have for example, if you have a supply contract, I'll keep using that, and they say, okay, why don't you we finance it, and you go and you should
Manage
and
it.
do your business. Bring your skill to the table, and then we share profit. We agree on sharing the profit after a period of time. So when you approach an Islamic financial institution, be sure that um, one of these models will be thrown at you as a product, in form of
Yeah.
a product. So you can begin to read about them, research them, but we don't want you to go there not knowing what this mean, right? And be like,
Exactly.
oh, I don't understand, I'm lost. What is all this Arabic? But the intention is that the way these models came about was that these were some of the models that were used in the time of the Prophet ﷺ, and obviously by subsequent generations of Muslims, and they have been proven to be interest free, and to be trade based. So one of the things that is very important is that when you approach a financial institution, no one is going to give you money for nothing. Like, you're not just going to get
Yeah.
money
People would
only,
say, how do
right?
they make money without charging interest?
Exactly,
So these are
exactly,
the modes they use to make money without charging
exactly,
interest. Yeah.
exactly. So you approach them, and you have to come with a real transaction that you want them to finance. If, for
Yeah.
example, I'm starting an Uber business and I need to buy a car, it is a car that is the real good or the real asset in this transaction, that the Islamic finance institution can tell me, okay, I'll do a murabaha for you. A murabaha, on the bottom here, there is the cost plus, which is that I buy the car from the vendor and I sell it to you at an agreed markup, an agreed price. If I buy the car for $1 million, I sell it to you for 1.2. You pay me the 1.2 back over a 1 year period.
Period.
And the benefit of it is it's not interest based. So even if, God forbid, there's a default, there's not interest just building up on that, right? But what is most important is that these modes are all approved Sharia wise. There's the joint ownership musharaka. Musharaka is commonly used for financing house purchase, for those who want to purchase homes or a property or a shop or something. This musharaka is often used for financing property. Um, and then there's leasing, ijara. Ijara is often used for equipment that you want to lease over a period of time. And then there's the deferred sale, the salam. Salam is used for agricultural produce financing a lot of the times, because it's basically selling. And this is an exception to the rule, because typically you shouldn't sell what you don't have, but it is permitted that you can sell you can take money for the produce that you're going to produce,
In the
just
future.
so it's something similar to the whole what do you call it now, customer financing, where the customer is giving you the money ahead to go and plant the goods that they need, and then supply it to them at a
In a
particular
later
date,
date.
right?
Yeah.
So that these are the modes that that would typically come across when you approach an Islamic financial institution. We
So
highly
when
recommend.
you are lost as to, okay, how do these companies or financial institutions make money without charging interest?
Mm-hmm.
Um, Latifa has explained everything to you.
Mm-hmm.
So be rest assured that when you walk up to any of these institutions that provide Sharia compliant or Islamic financing, they would be selling or they'll be advancing you in products some of these things that we've mentioned here. So
Yeah.
yeah,
Thank you
that's
so much.
fine.
Yeah. So I just wanted to. This slide is just to kind of show us what are the opportunities with an Islamic financial institution, because a lot of people are like, "Ah, I don't know. They said I have to do goods and services. What can I do? What exactly can I do when I approach financial institution? Should I go and tell them I want to do Mudaraba or Mshara? What should I do?" So I think what is important is, what is your need? Once you know your need and you tell them, oh, I want to do equipment financing, I want to do inventory financing, I want to have a supply contract that I need some cash for, I need some funding for, or I have a what you have to first identify your need, and it has to be a tangible, halal, you know, asset or good or transaction, right? That is the underline of of your financing need. Once you identify it, approach them, then they will determine the best model that works for it within those ones that we have identified, right?
Yeah,
So
exactly.
these are the opportunities. Islamic financial institutions are every day financing businesses for equipment, for inventory, for supply contracts, for construction projects. Rent financing, don't be surprised, is also available. Agribusiness financing, property purchase. There are opportunities out there. Let us open our minds that Islamic financial institutions are out there to do business, and they want to do business with you, right? They want to move your business forward. They want, to pump money into your business and make a good profit. As long as you can make a good case for them that that you have the potential to pay it back. Because at the end of the day, financing is about being able to pay back. Either you're paying it back by dividend or paying it back by the return on the financing facility.
Yeah.
So open your minds as you're listening to us now. Be thinking, what do I need? Do I need equipment? Do I need inventory? Do I need construction? Do I have a construction project? Or and it doesn't mean this is
Do I
not an
need to
exhaustive
supply?
list. Sorry,
Yeah.
go ahead.
Do I need to supply some goods and services to the
Exactly. Do I need to
clients?
find some
Yes.
business to clients, right? Once I
You
know that I
need
have a client that can take the client has committed to taking that supply from me, then that means I can go to the Islamic financial and say, hey, I have a client that has committed 5 million for this supply contract. All I need is financing to get the goods, things like that. But this is not an exhaustive list of what they can do, but these are on a daily basis the things that they've done over and over. So open your minds, think about, this opportunity. And obviously, like every other financial institution, some financial institutions require that you have good credit rating, a good credit history, that you have good cash flow in your business. You've kept good records. And we can have a different session talking about how to approach a financial institution and what you need to have. We can have a separate session about that in another clinic. But today we're just exploring what are those options that you have, right?
yeah.
But for every financial institution, it is typical that you don't go there and don't have good books and expect them to hand you the money, right? You have to have something to show that I can pay back this money. Good cash flow. You've maintained your records of your business. You have, good backing from your customers or whatever, a guarantor, some asset to back you up. And then you're ready for business. You're ready to talk. Let's, give me some money. So that's what I wanted to, highlight. And then also remember that Islamic financial institution is not just, the Jais banks or the big banks out there. There's also microfinancial institutions. Microfinancial institutions are willing to give as little as, 100,000, 200,000, like that, in naira. So they may be more costly, and we're going to talk about the cost of financing in the next slide. But that is that about Islamic financial institutions. They're an area of them. Do we move on?
Yeah.
Or do we
Let's
just
move on.
all right, thank you. So the cost of financing is something that we wanted to highlight here, because when we talk about financing, everybody wants money. Then we don't always think about the fact that this money comes at a cost, meaning that you have to pay back. And the fact that it comes at a cost doesn't mean that it's always interest, right? A lot of people feel like once you give me money, once you borrow me money, or not borrow me money, but once you finance me, let me use the word finance me, right? And you're asking something back, it means that it's interest. No, the cost of financing is that the person has staked their investment in your venture, right? Their funds in your venture. As long as they're staking it in a permissible way, then it is only permissible that they get something back as well, right? So if they don't get it back, if they don't ask for something back, then it's charity for them, but it is also a right for them that they get something back. So in equity financing, which is where we talk about like somebody owning a stake in your business, it is considered one of the most expensive, because obviously you're going to have to pay a percentage of your profits to the person,
Yeah.
right? It's although it's more flexible, right? In the sense that it reduces pressures on your business cash. So if you don't make profits, you don't pay anything. Nobody's going to hold you. The person that said you want to hold, they want a stake of a business. Nobody's going to hold you, right? But if you do make profit, then they get a big chunk of that, or a sizable chunk of that, depending on how much you guys have, if whatever sharing ratio that you have you have agreed to. Then there's also the fact that after equity, there's also private lenders. Private lenders are also more expensive than commercial banks. So a lot of people feel like, let me just get the money very quickly. Let me just, get like, I think there are some of these companies now, rent credit. Some people also
Rent
have
money,
some under the table arrangements, right?
branch.
They're
Yeah,
just
there are a whole lot of them out there.
yeah, there are a lot of them out there, and you think that it's okay for me to just quickly get this money quick and get and pay back quick, but effectively it's costly. It's more costly. What because they're giving it to you very fast. What compensates them for not doing all the checks that they need to do is that they're charging you more. you know
Exactly.
so effectively it's more expensive than going to the banks, or
Thanks.
going to a proper institution. And then now thinking about the less costly options. Okay, you're like, oh, this one is costly, that one is costly. The truth is, financing will come at a cost, but think about the fact that it's a cost benefit. What you call it now? It's a cost benefit, and have you
Analysis.
given me the English analysis,
Cost
right?
benefit
So it's
analysis. You need to weigh the
yeah.
cost
So
to the benefits you'll be getting
you
from
will
it.
have to pay something. Yeah,
Yeah,
you will have to
exactly.
pay something, but look at the fact that it's the benefit you're getting. Make sure the benefit you're getting, effectively outweighs. Because if it's equity, most likely equity, you're getting the benefit of that flexibility of not having to pay back a constant amount every. Because think about if it's a financing based on similar to like an instrumental payment, you have to be paying something every month, every month. Imagine if your business doesn't have that steady cash flow, you know.
Then it will run into problems.
Exactly. Right. So equity financing can be the most expensive, although it's flexible, and it gives less pressure. But then the other option, if you don't want anyone to own part of your business, um, is going the financial institutions route, or debt. Let's say debt. That route, and that route can, if you go the private lenders route, is more expensive, but if you go the commercial bank, it's even better. And then the best, if you can get it, is going through government schemes. Government schemes are more affordable because the government does have many, just the way they are grants, right? The government also has many schemes where they try to give SMEs low cost financing, because it's one of the biggest concerns, especially in Nigeria, that it's so expensive to go to banks. They're asking for 20-30%, right? But the government schemes are giving you single digit 9%, right? 10%, like that. And it's really to help the SMEs out there. It's actually for our SMEs out there to tap into this. It's not for the big businesses, it's for you out there. It can take more time. It can be more, they may have more requirements and things like that in terms of how to access them, but at least try first, right? And we will talk about some of the halal options out there for the government schemes. Do you have anything to say there about the cost of financing before I move on?
No, no, no.
All right,
You
then great.
exhausted everything.
All right. So in terms of the financing opportunities with government and multilaterals, right? I think I'm really excited because over the last 2 to 3 years, we've seen the CBN come out with all sorts of non-interest um, loans or non-interest financing options for SMEs, right? So SMEs should really be looking out and trying to tap it. One of the biggest ones is the CBN non-interest fund, um, for the micro, small, and medium enterprises development fund, MSMED. It's a very good fund, and the way it works is that the CBN basically has certain financial institutions that are qualified to disburse that money. So if you approach that financial and say, "Oh, I want to specifically, tap from the CBN's MSMED," right? If you tell them, then they'll just give you the requirements, right? And because that fund is cheaper, right? It's cheaper to, the cost of it, what you have to pay back is less than if you actually got the money directly from the bank, right? So know that these opportunities are out there. There's also the CBN Anchor Borrowers Program for those in the agri sector. We can Google these things up and find them out, and you can also reach out to us, if you want to learn more specifically about any of these things. You're interested, we do some advisory for businesses. If there's anything specifically that you want to learn more about, reach out to us on our social media handles, email, right? And there's also the ISDB ICD fund, um, that this is the ISDB is the Islamic Development Bank, just like how you have the World Bank. There's Islamic Development Bank that also they give funds to the financial institutions in Nigeria, and they say, take this money, for example, the BOI, the Bank of Industry, take this money and disburse it in a halal manner for SMEs in your country. So these options are there. Let us
Yeah.
open our mind, um, let us see the opportunities out there. And yes, if you need money, you have to do work. That's the reality. You have to get your documents together. You need to prepare things, but it will be worth it at the end of the day because you do have the financing and the funding, and you will be more responsible in how you use the money, right? Once you've done the work.
Yeah.
So I think that's that about the financing opportunities. Harib, do you want to take us through this business owner's mindset? What should he be asking himself when he wants
Okay.
to?
Yes. So, like we said earlier on, that for every businesses, I think you must decide the kind of outlook you want for your business.
Yeah.
And to be sincere, for some small businesses, in the short term, they might just want to keep it short. You understand? But
Mm-hmm.
as opportunities opens, they might have a change of mind to maybe
Mm-hmm.
grow the business. But having said this, the most important thing is the discipline. When I mean discipline, it's important for a small business, for a business owner. It's important. I recommend, I advise that you go register your business because opportunities can come any day, anytime, from anywhere. And for you to get these opportunities, I think the most basic of it all is for your business to be registered. And in Nigeria, for example, there are business registrations that cater for small businesses, and if you want to keep your business small, there's a business registration for you for that purpose. So for me, the first thing is the discipline, which culminates into going to register your business, is the first step any business owner should do. And if that business owner can do that, then you can easily start selling goods and services. And as your business grows, you look into your maybe your inner circle, you
Mm-hmm.
get, and of course, where the question of what do I need the money for comes into play. If what do you need the money for? You could need the money to maybe to expand your business. It could even be to get a shop or rent. Let's say you've
Mm-hmm.
been using your backyard or your boys' quarters, and
Mm-hmm.
you know that customers cannot necessarily reach out to you from your boys' quarters. So you might need the money to get a shop or a rent.
Mm-hmm.
You get, and once you be are able to identify that, you can easily go to all these financial institutions from their websites. You see if they finance something similar to what you are looking for. You get, if it's an asset, for example, you're a tailor, you need a machine, right? You can go to
Mm-hmm.
their, do they do asset financing? What is the amount that they can give? So you need to understand what you need the money for before you can even go to any financier. If you've exhausted your inner circle and no one can provide you, or maybe the amount required is too much. Then the next is my short, am I need short term or long term? Very, very valid. A whole lot of people have been into this quagmire, or should I say this mistake, where they
Mm-hmm.
use short term financing to finance long term
Long term.
assets.
Mm-hmm.
You get, so it's important you know what the, should I say, from coming from
The
what you need the
horizon.
money for,
Mm-hmm.
exactly what
Mm-hmm.
you need the money for. For example, I need the money for an asset. Okay, this asset, how capital intensive is it, and
Mm-hmm.
how, for how many years, for example, can I be able to use it, and what kind of institutions can I go that will provide me the required financing based on the amount and the term and the tenure. So it's important you know this. There are some assets that is best for you to get a more long-term financing, but practically it's be very, very difficult to get a financing that exceeds 5 years. To be sincere, for a business owner, the highest you can get is maybe within 36 months to 48 months. You get,
Mm-hmm.
depending on the assets that you want to finance. For short term financing, it could be maybe you need working capital, and banks, private lenders, commercial banks, crowdfunding really can provide you these short term loans where maybe it is geared towards a particular need, because you must also be able to state the particular need you need this funding for. And they could finance you maybe between 6 to 12 months. You get, especially maybe you want to acquire maybe goods, you have some supplies to get, and you know that once you get this supply, you can easily sell them within the short period. So you know that you can sell them within the short period. That automatically means you do not need a long-term financing. You need a short-term financing for that purpose. But if it's a kind of need that you know that it will elapse for maybe 2, 3 years, then you also need a financing that would also last that 2, 3 years, because as the cash flow is dependent on you paying back. So you won't want a situation whereby the cash flow would not necessarily be enough to meet that the short-term need. So it's better you get a financing. For example, you know that the financing that you need, or should I say, the assets that you need to finance would only materialize or maybe generate cash flow more in the long term or mid to long term period. Let's say from the second year to the third year, you should not go for a financing that will just last 12 months, or else you fall into trouble. You get, so it's important you ensure that whatever asset you're financing, your whatever asset you need, you get the required financing for it.
Mm-hmm.
Um, I think we've mentioned what we have here. I'm exploring my inner circle. Are you exploring your inner circle enough? The truth is, most business do not necessarily explore this. I think we've been distracted by the buzz of fundraising, external funding, and to be sincere, some business owner use external funding to prove that yes, they've arrived. That to prove that yeah, their business is fundable. Let me use that word. But I can tell you categorically that a whole lot of businesses that go out there to seek maybe external financing do not necessarily need them. Perhaps all they need to do is maybe speak with their suppliers if they're in the business of buying and selling to maybe grant them some leeway to be able to sell and maybe pay them back, or maybe speak with some wealthy family and friends that can maybe support them through short-term debts or short-term financing, or maybe even some of their this thing, what is it called? Um, Maybe their personal savings, you get that they saved over time, you get that they can put into the business. And this also goes back to me saying discipline. I remember I was looking at, there was a course I did on entrepreneurial finance, and we are being taken through how Jeff Bezos, the founder of Amazon, started. When he started, he loaned from his personal saving, and this is to show how disciplined he was. And to be sincere, your level of discipline, to a very large extent, translates into how your business will turn out in the future. He borrowed Amazon $10,000, and he took it as a loan. Said, "Okay, I'm borrowing this business a loan." So from that early stage, for someone to be able to segregate his personal finance from
His business finance.
business, it speaks volume of how that business could go far. You get. So it's important that we explore this inner circle first before going outside. Then next is, do I have proper financial records and documentation? Oh my God. This is where a whole lot of small businesses fail. As if I can tell you categorically that if you
Yeah.
should go out there and do a survey of small businesses that are out there, 99% cannot give you a financial record. 99%, I'm very sure of that. And that is why a whole lot of these schemes that the government have, they don't have anybody to access them. Because for you to access funding, of course, which is not the major talking point for this topic, you need to have some things in place. You need to have your business registered. You need to have your financials together. What you earned this month, last month, previous month. You need to have them
It doesn't have to
documented.
be complex, right? It can be
It
as
doesn't
basic
have
as
to
this
be
are my this is
complex.
my revenue and these
Exactly.
are my expenses.
Exactly. If that's what you can show, just get an accountant. Oh yeah, come, just let me put this together. I've been able to tell you this is my income, this is my expenditure. I'm very sure there's no accountant that will want to collect 1 million for you for that. They could even do it for you for free. It is when you've made it difficult for them, that is when they will be charging you heaven and earth. You get. So it's very, very important that we put our books together. Just to cite an example, during the peak of the COVID last year, there were a whole lot of grants from international organizations.
Yeah.
And I started calling my friends that have businesses, oh yeah, come and take advantage of these grants. But you need to provide your financials. None of them could provide one. And this grant amount was summing up to 400,000, 500,000 naira, which could have helped them a lot. So, part of the discipline for small businesses is to put your books in order, get your financial and documents for your business together. The last but not the least I have here is, do I have a strong and attractive business case? It is also very important. It is not enough to have your business registered. It is not enough to have your financials together, but you must have a very compelling business case. You get. And what is a compelling business case? A business model that is solving real problems, right? A business that's solving real problems, there's a market for it, it can scale, you get. So if these three things, and of course there are many others, are there, then be sure enough to be get attracted to maybe financial institutions or maybe debt providers or even equity providers,
Yeah.
because they know that
Angel
there's a market for your
investors.
product, your product or your services is solving a whole lot of problem. So you need to ask yourself this question. We believe if you can ask yourself this question, you are on the right track to getting the required funding you need for your business. I would stop there.
Thank you so much, Habib. I think you
You're
nailed it.
welcome.
You nailed it. Jazakallah khairan. So we are going to end it here because it's been an hour that we've been talking, and we don't know if there's been any comments so far. Habib, do you see the comments? If there's anything
No, we
anybody's
don't want
saying?
comments.
All right, no problem.
Comments.
But we are sure that there'll be people watching this later on. So please feel free to drop us questions on our social media handles or even
Yeah.
comment in the YouTube page here, and also reach out to us, follow us. We have a website, and we're also active on these social media platforms. So please follow us. We, post content that is beneficial, that is educative, regarding finance, business, personal finance, Islamic finance, and all that beneficial stuff that you love to know. So thank you so much, Zach Makran, for listening to us.
Thank you
We're
very
gonna
much.
call it a day, or an hour.
And subsequent editions will be coming in with very, very interesting topics that would
Yes, and
engage
guests.
you, and you'll be very, very happy to be part of. So just stay tuned for our monthly business clinics. We are here for you. Like Latifa had said, if you have any question, just hit up us on our four social media platforms: Instagram, Twitter, LinkedIn, and Facebook. Or you can just reach out to us via our website at info@ourfinance.com. We are always here to serve you.
All
Thank
right.
you very
Thank you
much.
so much. Thank you so much. And see you next month. Assalamu
Yeah.
alaikum.
Walaikum salam. Bye bye.
Bye. Gonna have to stop